Jay Powell. Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
As previously we have spoken about the coming FOMC, Jay Powell is going to leave the rates unchanged. Just want to let you know that our system is pretty accurate in that sense. Now, I'm going to talk a little bit about 3 companies right now. First, Meta. Second, Microsoft. And I'm going to keep Tesla for last. If you look at Meta, you will start to see that the company is doing exceptionally well. Yes, the PE ratio is on the high side. The profit margin is interesting, it's 29%. The return on asset is 70% and the return on equity is 26%. Now, within a month, they're able to turn their product into cash. Look at the current ratio, and the quick ratio is above the standard by a lot. Now look at debt servicing coverage ratio, is more than 1. Now yesterday, the news came out that Meta actually beat the earnings. Let's look at another company. Microsoft again beats the earnings. And you will realize that both Microsoft and Meta, if you look through the chart, it will come down just a little bit. That's what the chart is pointing. And I must say the chart is correct. It will come down a little bit before it spikes up again. Now the PE ratio is 36 times, which is high. But if you look at the profit margin, the return on assets and the return on equity is extremely healthy. The debt servicing coverage ratio is nearer to 3. Now if you look at Tesla, this is where Tesla actually did not beat the earnings, and yet the shares was going up after market. And if you see that we are pointing it up, yes, even though that they missed their earnings, Elon Musk gave a good guidance into the future. And if you look at the PE ratio, yes, it's on the very high side. If you look at the profit margin, return on assets, return on equity, everything is extremely well run. And the quick ratio, the current ratio are above the standards. The debt to asset and debt to equity is pretty decent. In fact, I would say it's exceptionally well run. The debt servicing coverage ratio is 5 times.
Musk also said the company would start testing its self-driving taxi service in June. He said the robotaxis would first hit the streets in Austin, Texas, and later in the year in other states, including California.
Why Tesla stock prices went up even after they have missed the earnings is because Elon Musk's guidance into robotaxi is giving the lift that the market wants to hear. So, between the 3 companies, I would say that all 3 are amazing companies. Meta, who is going to AI, will be interesting, considering DeepSeek can build a generative AI with only $6 million USD. Perhaps that could be a good news for Meta. Whether the 6 million is true or is false, as according to most of the experts where we hear from CNBC or from interviews, that's just up for debate.